evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. And boy, it's great to be back. Traders, you know me, I don't really trade around the holidays, so we had the 4th of July holiday in our way. So before the 4th of July holiday, I left you with a video on June 27th. In that video, I mentioned there is a big head and shoulders looming above us, and it's going to take us down. It's been a theme that we were talking about for quite some time. Well, I haven't done a video since that day. I left that video out with the head and shoulders clearly illustrated for you. Traders, we dropped 44 points in the S&P since that video. Now, believe it or not, for tomorrow's trading, as scared as I am to do this, we have a green Omni for tomorrow. This is July 9th, 2008. It is Wednesday, and the market is giving me a green Omni. Now, traders, I am no big fan of getting long in a bear market, but I can only trade what the analysis provides. The analysis says, Oscar, you better tell them to buy it tomorrow. So that's what I'm here to tell you. But at the same time, I want you to keep this in mind at all times because it's back. Traders, it's back, and don't fall in love with the upside. There it is, traders. Don't fall in love with the upside. I don't care if we have a green Omni and it rallies for 5 straight days. I am telling you, there are more problems out there. You can see them in the analysis, in the charts. There are more problems fundamentally with the economy right now than we really possibly could have in a market that's going to go up. So if it's going to bounce, it's going to be a bounce that I do not want you to fall in love with. Yes, we're going to try and trade it from the long side tomorrow. I don't know how many days or even hours we'll get out of the upside, but it's not going too high, traders, so don't fall in love with the upside. And I will keep this on my board until the markets finally tell me to take it off. Now, if you traders remember, I had that on my board since probably January of the beginning of this year. I had don't fall in love with the upside on the board. No matter what rallies came, I said stick to that. It may rally. Don't think you could be long-term bullish on that. Wait for a spot to get short. Then, I guess maybe 2 months ago, guys, you remember the exact time frame? It's got to be at least a month and a half, 2 months ago, the markets were, giving us a turn. So I had no choice but to erase don't fall in love with the upside. We've had our rally. We're back down to bear mode again. So I tell you again, do not fall in love with the upside. All right, got that out of the way. I just want you to know it is there. It is looming over us. The massive head and shoulders is still there. We are probably going to go up now and test the right side of the shoulder and then head right back down. Trade is one of the many, many things that I read or that I study at all times is, well, it's a couple of really good things, but you got to watch for now the credit card companies, all the banks that secure credit cards and give out credit cards to people. Well, they started defaulting on their houses, and that put us in a lot of the trouble we're in now with the stock market. They were using their home equity as lines of credit to survive. Some of them to survive, some to buy more property, and others just to get through life more comfortably. Well, they've switched, it seems, aggressively to credit cards, and now they're aggressively walking away from their payments on credit cards. So you're getting another round now of, I guess, the same sort of problem that we had with the prime rates and the prime rate loans. Now you are having trouble, the subprime rate loans, I should say. Now you are beginning to have defaults like crazy in the credit card sector. Those same banks that got in trouble giving out the loans to properties are now starting to feel the crunch of the credit card companies, or at least the creditors. So there is more trouble coming our way. If that was the only reason, it'd still be enough to push us down again come the future. So you got to expect more downside, but there will be some buying opportunities within the bigger down move. With that in mind, for tomorrow, we have a green Omni in the ESU8, baby, a green Omni. Again, I'm scared to have to get long, but I'm doing what the analysis tells me, as I always do. Now, traders, let me show you a couple of charts. I got a couple of techniques I'd like to show you, and just to give you a little bit of reasoning into what we do and what we look at when we're deciding direction in markets. Let's go look at some charts, traders. Okay, traders, the first chart you are looking at is the Dow Jones Transportation Average Daily Bar Chart. The Dow Jones Transportation Average, in my view, leads the way. NASDAQ follows it. S&P runs right up behind the two of those. The S&P will follow the transports and the NASDAQ, right? So let's look at both of them. Right now, you got the transports chart up here. A technique I have not yet shared with you in these videos, something that we look at the Omni Trading Academy quite often. You are looking at a daily bar chart with Keltner bands. These are Keltner bands. I changed the parameters slightly on my Keltner bands because I like the parameters that I use better, I guess. So they're not it's not pre-fitted, it's not pre-canned. They are my own parameters. However, nice little discovery here, which I thought I'd point out to you. Look at this, very easy to find. Since May of 2008, represented by this dotted line, every time that the market got itself above the middle Keltner band, it rallied and boom, hit the top band within a day. Watch. Comes back down, rallies up, gets above, and in a day, boom, hits the top. Comes back down, never really gets above again for a while, gets above, and within the next day, boom, hits the top. This whole ride down never got above the center band. 3 attempts, never got above. We got above the center band on Tuesday. Why not expect by Wednesday to go hit that top Keltner band? It's what it seems to do consistently since May of this year. We are short-term traders. We like taking short-term signals. That is one of many, many indicators I studied this evening to come up with this trade. But it is a very good one and a simple one for you to follow. Remember, Keltner bands, take a look at what happens when the Dow Jones Transportation Average Daily gets above the middle band. Each and every time it gets above the middle band, you rally within a day to the top band. Now, the middle band, 48.65. The top band is 50.22. Well, maybe there's 180, 200 points coming our way towards the upside in the Dow Jones Transports. Remember, don't fall in love with the upside, but a little rally is something that we can trade if it comes our way. Let's look at another chart. Traders, the next chart you're looking at is the NASDAQ Daily Bar, the September NASDAQ Daily Bar. For you Emini NASDAQ traders, the symbol has been changed just recently from the EN to the NQ on most platforms. Keep in mind now the EN has become the NQ. It is the same chart. They've just changed the symbols. Okay, you are looking at the NASDAQ Daily Bar, and I have noticed that since May of 2008, a lot like the transportation average, something else has been working well in the NASDAQ, and that is parabolics. Parabolics have not gone into a buy since May of this year, and when it did go into a buy, you had a few good solid days up. Well, we've gone into a buy on Tuesday, on Monday, and on Tuesday, pointing towards a buy for Wednesday. We haven't seen it in a while. Very many indicators that we study are pointing towards a little bit of a rally coming our way in the indices. The leader being the Dow Jones Transportation Average, absolutely pointing higher for Wednesday. And NASDAQ usually leads the S&P behind the Transportation Average. That's pointing towards the upside for Wednesday. I think we're going to have to buy the S&P for Wednesday. Here are a few of the many reasons why we feel that way. Do your own homework. I hope these techniques are helping you further with your studies of technical analysis. You know what? We study lots and lots of techniques here, and that surprised me today because I look at that a lot. It doesn't usually just jump out at me like that. So those Keltner bands, hey, you know what? It happened every time since May. I'm going with that. We'll see what happens. Now, traders, generally we only get, if we're lucky, two rally days, two big rally days in a bear market before the downturn. So I will say it again. Don't fall in love with the upside here. Just be nimble, get in, get out when it's profitable, and stand back and see what's going to happen. Because this market is vicious, traders, and if you are trading without stops, or if you're trading too large, this market will carry you out, and that'll be the end of your trading. So be wise, place stops, place them first, and be careful trading these markets. Volatility is like this lately. Okay, traders, so for tomorrow, again, it is Wednesday, and we are looking for S&P to go higher, NASDAQ to go higher, and Dow Jones Transports, including the Emini Russell, to go higher. One of the trades that we have lined up at our site right now is the ESU8, the Emini S&P. Omni says to buy the S&P in the mid to low 1260s. Trading 1270 currently as I speak. Do your homework, get your orders in. Traders, if you don't know where to place your orders or how or why, or if you're not good at technical analysis, come on down to our Trading Academy. It's www.livewithoscar.com. You can sign up for free, traders. Take advantage of what we have for you. This is all about helping you traders, and we do lots and lots of it. A lot of work goes into our site. We prepare every day to help you learn these techniques, become better at analysis, and how to trade properly. So come on down to the site and take advantage of what we've put together for you. Make sure you place your stops. All right, traders, so buy in the mid to low 1260s in the SEP S&P. Omni's profit objective equals the mid to high 1290s. And on the way up, we expect some resistance at around the 1280, 82 area. So if everything works as we have planned, the market should move higher, and we should be able to get out of a decent trade. Now, traders, I will say this for you guys that have followed me and you know my style. If we go to the upside area first before ever getting filled on the downside, I am canceling this trade. I want to see it go to the downside first, then the upside. So if this thing comes in higher first, I am going to end up canceling the trade depending upon how high it comes in. Keep that in mind for you traders. You Omniacs that are at my site all the time, you're getting to know my mentality. I think you understand why I would do such a thing. All right, traders, I can't wait to get into this trade tomorrow. I hope it works out really well. I tell you, we did a nice lesson today on analysis. We looked at a lot of charts, and a lot of good analysis is showing up, and those head and shoulders formations are showing up across the map in all sorts of commodities, currencies, S&Ps, in the financials of every aspect. We have head and shoulders, or at least half of a head and shoulders formation, or 2/3, I should say, on many of those charts. So the flavor of this week into next week, once again, will be the head and shoulders formations. Look for them, trade them properly. All right, traders, if you'd like, give me a call anytime day or night, 702-629-4755. And as always, please continue sending out your emails. My email address is oscar@futuresanalysts.com. Okay, traders, I tell you, don't trade alone. You cannot imagine how many traders from around this world come to our site and say, Oscar, I cannot believe I found this place. It is a spot where I'm accepted, where people are helping me. Your schooling is helping, and I'm no longer alone. I have a crowd with me, and we all do analysis based towards the same thing. It's getting this market called correctly. So make sure you come on down. Don't trade alone, traders. It's really difficult to try to get this right, let alone do it by yourself. So come on down to the site and let us help you do that and come to a nice crowd. And I think you'll really, really enjoy it. All right, guys, anything else I should mention before I get out of here?
I think you covered everything.
That's everything. Good. All right, traders, thank you so much for watching this video. Make sure you do your own homework. Don't ever take anyone's recommendation unless it agrees with your own analysis, because the bottom line is if you pull the trigger on that trade, it is your fault. Do your homework. Don't leave it up to blame to somebody else. Do your homework. Make sure you agree. Then think about taking the recommendations. Okay, traders, say this to yourselves every day, every morning, every afternoon, every evening. Say it to yourselves to help keep the emotions out of trading, and you know what that is.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.